How does ASC 606 affect SaaS revenue recognition on P&L statements? Imagine trying to track your earnings from a subscription service that customers pay for upfront but use over many months. It can get confusing, right? That's where understanding how revenue is recognized becomes so important. Today, we're going to explore how a standard called ASC 606 changes the way SaaS companies report their profits and losses. First, ASC 606 shifts the focus from when money is received to when the service is actually delivered. So, if a customer pays 1 year in advance, the revenue isn't recorded all at once. Instead, it is spread out over the 12 months as the service is provided. This means the profit and loss statement better reflects the real work happening each month. Next, SaaS contracts often include multiple parts like software access, customer support, and updates. ASC 606 requires companies to identify each of these parts separately. Each part, or performance obligation, gets its own recognition schedule. For example, if a customer pays for both software and support, the revenue from each is recognized when that specific service is delivered. This can change how much revenue appears in a given period. Another key point is how the total contract price is divided. If there are discounts or usage fees, the company must allocate the total payment to each performance obligation based on what each part is worth on its own. This allocation impacts when and how much revenue is recognized. For instance, if a customer gets a discount on software but pays full price for support, the revenue from each will be recognized differently. When contracts are changed during the term, such as upgrading or canceling services, companies need to reassess what they owe and what they have earned. These adjustments can make revenue recognition more complex but ensure the financial reports stay accurate. Payments received before services are provided create what's called deferred revenue, which is a liability on the balance sheet. ASC 606 makes sure that this deferred revenue is gradually turned into earned revenue on the profit and loss statement as the service is delivered. This process makes the financial picture clearer and more trustworthy. For finance teams using software solutions, automating these processes is essential. Good software can handle complex subscription models, track contract changes, and allocate revenue properly. It also provides real-time analytics on deferred revenue and earned income, helping teams manage cash flow and profitability better. In summary, ASC 606 makes SaaS companies recognize revenue based on when they fulfill their contractual promises, not just when they get paid. This results in profit and loss statements that truly mirror the company's actual performance over time. Using the right financial software tools helps ensure compliance and gives a clear view of the company's financial health.